The world is changing, days of fire and chaos are coming, and if you want to save yourself from the economic abyss you should pay attention to this video. Today we are going to talk about Jim Rickards and his dark forecasts for the economy. Jim Rickards makes a mention of the crisis at Evergrande, the Chinese real estate developer. He says there will be a series of cascading effects, first the wealth management products, then corporate debt, then contractor defaults, unfinished homes and finally a stock market crash. We will see if China manages to handle its internal problems, but no matter what happens, the world economy has many open fronts. Let's continue reviewing Rickards' words. He comments that in a very short time we could experience a panic similar to the one that took place in 2008, when we were close to experiencing a collapse of the banking system. The system was finally saved, but the problems were postponed for later days. On China, he comments on how Evergrande's problems could be transferred to banks and alarm both depositors and shareholders. You have a video up here about the Chinese real estate bubble. Rickards also comments on how crises are getting bigger and bigger, how bigger and bigger bubbles need to be inflated, printing more and more dollars to produce the same dollar of wealth. And this, of course, has consequences. The system today is much bigger than in 2008, and the crises are also bigger, as well as the interventions must also be bigger. In fact, this is easily verifiable. We have debt at record levels both at corporate and public level, and 2020 has been the record year for dollar printing in the US. On China, he comments, of course, that losses could be passed on to other markets, and this could encourage some traders to trade against a particular instrument or hedge fund, just as happened in the Asian crisis of the late 1990s. You could also see a liquidity panic, where everyone wants to get their money back. This is especially important in the stock market, where we have record leverage, and where we can go from the excess liquidity we have seen in recent years to a shortage of liquidity. We can also comment that bank derivatives are higher today than they were in 2008 and rates are at record lows. Some central banks have already begun rate hikes, and others are scheduled for 2022. The Fed has announced the start of tapering for the month of November, and we will see if it is finally carried out, since it is not the first time that they have tried to carry it out and have had to backtrack. What will they do if the stock market falls? What will they do if oil prices go above $100 and this precipitates a crisis? These are some of the questions we should ask. They are good questions, and let us remember that in 2008 the Federal Reserve balance was less than $1 trillion and today it is more than $8 trillion. Well, this is the situation we have. The challenges are accumulating in the short and long term, and what seems clear is that the coming years will be complicated and will bring a paradigm shift.